Good morning, everybody. Kevin Cage back with another cryptocurrency update. Welcome to the channel. Like and subscribe if you like what you see, and let's get right into the information today. So to kick things off, we have shared here by Charlie, the Fed balance sheet moves up $4.07 trillion. Once again, the highest level of the year, up $306 billion over only the last 3 months alone. That is when the QE, the quantitative easing, began, and they kept extending it, as we know, every few weeks, and we keep expecting it to end, but it is not. We are seeing higher highs for the stock market, and we are just getting started. Now, right here, a quote by Jerome Powell: "In no sense is this QE, quantitative easing, when the Fed is pumping money artificially into the monetary supply. It's a type of monetary supply, or a monetary policy, I should say, that they think is healthy, but again, long term, everybody admits that it has disastrous effects." And this is nothing like it. And I know I've shown you guys the parallels of 2013 as well in that other video I released like 2 days ago, so go ahead and check that out if you haven't seen it. We are just getting started. According to Greg Mannarino, guys, we are going to see higher highs yet again after that little correction we had the other day with the S&P 500. And now put your tinfoil hats on. He's saying that there's going to be some type of event orchestrated, or some economic excuse or deal or war or something, in which will prop up the price again of crude oil. So let's keep an eye on that. I'm not advocating it, but I'm relaying the information because I want to see how closely tied all of this really is to one another in all of these various markets. Next, I do not know how to pronounce this gentleman's name. I believe he is from France, but he has this, and he basically has this article right here, of course, and it's the new Volcker rule, allowing, German banks to really custody digital assets, especially with investing in the hedge funds. I've shown all the correlations with basically allowing them to have hedge funds with cryptocurrencies. And this is probably the most bullish news that we've gotten with validating all cryptocurrencies, for that matter. This is huge, guys. We have ETFs, we have various products being built around the cryptocurrency market, and now they are ready to dip their toes in. We're talking central banks at a central bank level, governing countries that are able to actually dip their toes in and build their own central bank digital currencies, potentially building their own central, on their own blockchain, which obviously could be costly, or they can utilize other existing infrastructure today and hopefully bridge all of that with the Interledger Protocol, ILP. Now, there's tons of conspiracies lately. I know, of course, end of year, everybody gets very, very bullish about somehow tying in the XRP ledger. Obviously, without a doubt, it is the most superior blockchain, or I should say ledger, to date. Now, there are other projects that have great potential, and there's a lot of competitors, hopefully, not necessarily in the global remittance aspect, but in the world of trade finance, or just decentralization for that matter, that could do great things in the future as well. So we'll see how this goes, but I wanted to read what he compiled for us here. Regulation issues. Use of crypto assets solved. The 2013 Volcker's Law has been amended to enable Ripple doing its business with banks by extending the exemption for liquidity management, guys. This is what we've been waiting for, and now this is effective, I should say, January 1st of 2020. Now, it was limited to securities and is now extended to FX trade, foreign exchange trade, for those of you that do not know. And right here, the 2013 rule excludes from the definition of proprietary trading the purchase or sale of securities for the purpose of liquidity management, and does not extend to foreign exchange derivative transactions used by a banking entity for liquidity management. The final rule amends this liquidity management exclusion substantially as proposed, permitting foreign exchange forwards, foreign exchange swaps, and physically settled cross-currency swaps, as well as non-deliverable cross-currency swaps. Now, obviously, these swaps are derivatives. Right here, in each case used by a banking entity in accordance with documented liquidity management plan as part of the banking entity's liquidity management activities. The link is right here, and you guys can read through this if you want. And again, just right here on Harvard Law School Forum on corporate governance and financial regulation. Next, digital currencies. Keep an eye on remittances, shared by Matthew Linney, and this is just ING, a Ripple partner, just talking about the importance of remittances here. Sending money home can be an expensive business, but it doesn't have to be. Digital currencies offer the possibility of lower fees, giving rise to more frequent and cheaper transactions. This has implications for the FX world, particularly the dollar. And what I want to emphasize, guys, is obviously it's a lot cheaper. One of the main points, besides the technology being real time, is there's not as many intermediaries, so you don't have to go through all of these clunky systems. It's simply one blockchain. You don't don't have to go through different, connectors. You don't have to go through different mobile wallets. You don't have to go through different payment providers and financial institutions. It's simply on one single access, and there's less systemic risk that comes with this. So really the benefits are no brainer, but it's the matter of developing the proper rails with the proper liquidity to ensure that it actually is cost effective. And then right here, I found this interesting. This is the top 20 recipient countries in 2019, or remittance recipient countries, I should say. And notice these are a lot of the same countries that Ripple's been targeting, whether it's low-hanging fruit or some of the big guys. We know we have a huge amount of India on board. We know we can see APAC, we can see the Southeastern Asian countries here, and it's really interesting to draw the parallels and see and maybe just list who we haven't had yet and who we need to ramp up still. Because keep in mind, even with the Mexican peso, with the MoneyGram partnership, guys, we are only using 10%. Wait until we scale it up. MoneyGram has literally said, let's go. We got to scale it up. They want to go 100%, but it has to be cost effective and there has to be true compliance, and they have to develop this over time. I would love for them to flip the switch. Maybe they can. I'm not really sure what we're waiting for. There's a lot of, conspiracies and analyzing and over speculation that goes with that. But hey, I'm ready to wait, and I know what is coming. Right here, Thal Rathar. So big credits to Fame21 More. This is Darren Moore, one of the top-notch researchers. You can find him on Twitter, XRP Darren, and he shares this video of this woman discussing and just saying that, we need to move away from, the dollar and all of these main currencies and move away from something or to something. And obviously Santiago Velez comes down below, and obviously we're kind of talking about this. What does she say in this video? I'll play it for you. She says a multipolar monetary system, all right, with all different countries. And he says right here, the something is anything liquid enough, any asset liquid enough to use Interledger protocol. The rest is based on performance characteristics and tokenomic features. And we all know what has the best performance characteristics. We all know that what was created literally brother and sister, XRP and ILP, the Interledger protocol that bridges all of these networks that communicate normally together. And you still need that bridge asset. They can use whatever asset they want, but if XRP is the most liquid, it will be most cost effective to them. And we are here owning a portion of the protocol before anyone else does. There's so many skeptics that do not understand where the money is coming from, and that's just laughable when you look at the entire monetary supply. So I'm going to play this video, guys. Let me know your thoughts down below. Hit that like button. I appreciate all the support, and I will see you in the next video.
There's the European economies, there's also China. We might switch to a multipolar international monetary system. And this is the next speculative question. In order to get out of the dollar, you have to get out of the dollar into something. And the question is, what is the something? So, as was pointed out already by several of the speakers,